Before you invest in your next real estate syndication or other syndication, you're going to want to watch this video to learn how best to hold that interest. All right, let's get started. Okay, so when it comes to investing in a real estate syndication, what you're doing is you're actually holding an interest in typically a limited liability company. Sometimes a limited partnerships, but most people set up LLCs for these syndications. So if I was going to invest in a syndication, you know what the rules generally are. You have to be an accredited investor in most instances to make that investment. And so most people, when they invest into a syndication, they're not thinking about asset protection. They're not thinking about estate planning. What they're thinking about is, hey, how do I start benefiting from holding an interest in this much larger deal that I could never take down on my own, but now I'm going to be part of something. I'm going to be getting quarterly draws. So all the excitement that comes from getting involved in a syndication is there, but we do not think about how best to hold it. So what I want to show you is how investing into a syndication should be structured and talk about some of the reasons why I'm making this recommendation. So if I was, when I invest into syndications, let's say I'll just tell you, I'll show you the last two that I did. So they're the last two real estate syndications that I got involved with, okay, right here. What I did is I realized I didn't want to hold this interest in my own name. Okay, so when I was approached by these syndications, or I actually reached out to them about making the investment, they sent me out the standard forms they send to determine whether or not you're a accredited investor, and they assumed that I wanted to take my ownership in my personal name. Now, I reached back out and I said, no, this is not how I intend to take ownership of this investment, because if I were to take ownership in my individual name, the issue I'm going to have is not if something goes wrong here, I'm going to be sued. That's not going to happen. I mean, they could have a property sink. Let's say it was in Florida and it's a sinkhole opens up and the property collapses into the sinkhole and there's 100 lawsuits. It's only going to be against the LLC, not the investors. That's why people invest into these things, is because they're protected from the liability that comes from owning the asset directly. What I'm concerned about here in making the investment, number one, is what happens if I'm sued? So here's a creditor out here that sues me, say, and they get a judgment against me for $200K. What I'm concerned about is if they had this judgment levied against me, then they can take that judgment and then go to each of these syndications, the sponsors, and say, hey, guess what? Clint owes us money. We have a judgment against them. We have now placing a charging order on his interest. We've gone to court and we've now charged his interest, so that all future quarterly distributions shall go to us as the creditor. So you skip Clint and you pay the money over to us. So that's what can happen when you invest personally, that those lawsuits will now hit you and attach to your interest. The second concern that I have is that if something were to happen to me, let's say I'm incapacitated or ultimately I pass away, then this ownership interest here has to be transferred to my beneficiaries. And by transferring it over to my beneficiaries, that means they're going to have to qualify as well. And maybe they don't qualify to own the interest in the syndication. So that could be a potential issue. Maybe they have to be liquidated out. And I just don't want them to have to go through the process. So what I'm concerned about, number one, when I make my investment in the syndication, is asset protection. And the second thing I'm looking at here with my syndication interest is transferability. How do I transfer this interest in the future without having to worry about creating complexity for my spouse, my children, okay, or whoever your beneficiaries are? So those are the concerns. How do we fix it? What I've done, and I recommend this to anyone who makes an investment into syndication, is to hold your interest in a holding LLC. Typically, I'll set this up in Wyoming. Maybe I'll use Delaware. So those are the two states that I'll typically use for this structure. So you set it up as an LLC. Now, here's what's key to do this, okay? This LLC here should be a disregarded LLC for federal tax purposes. So when I went back to these two different syndications, one of the things I had to show them and attest to is that I, Clint, own this LLC that is making the investment, and that I am the accredited investor. Okay, so they look through the LLC to me and they say, if Clint's accredited, yes, you can make the investment. So in this particular situation, I've set up a Wyoming LLC that's a disregarded limited liability company. Now, What type of, it's in Wyoming, and it's manager managed. Okay, so when you're setting it up, it's a manager managed LLC where I'm the manager and I'm the member. So now what has this done for me? Well, number one, it's Wyoming, so I have the charging order protections, meaning if somebody sued me, like in my example, and they got a $200,000 judgment against me, that judgment, they can't go around me and reach out to the syndicators and say, hey, we have a judgment against Clint and we've charged his LLC interest. Syndicators say, well, we haven't received any notification of that. And they wouldn't, because the charging order only applies to what you own. I don't own an interest in these two syndications. I only own an interest here. So they charge my Wyoming LLC and they say, Clint, if you take any money out of Wyoming LLC, you have to pay it to us. Newsflash, not taking money, so you're not getting paid. But my syndicators can keep paying me money. They can keep giving me those quarterly distributions that come down into my Wyoming LLC, and I'll just start accumulating that cash here, and maybe I go out and make more investments. So the point is that by using this, you're going to give yourself asset protection, okay, for those syndication interests by having that Wyoming LLC there, because you have, number one, what's called charging, okay, order protections. Now, the second thing, the benefit here, has to do with transferability. The issue that I brought up earlier when I was discussing moving that syndication interest if something were to happen to me. So how does transferability play into this? Well, since I own an interest in the Wyoming LLC, if something were to happen to me and I pass away, let's say I'm in a car accident and I die, and then my children are the beneficiaries of my estate. Well, now I'm not transferring them these individual syndication interests up here. That's not what's getting transferred to them. So what's getting transferred to them is the Wyoming LLC. So they step up into my shoes as being the member of the Wyoming LLC. And so now that Wyoming LLC continues to receive distributions from the syndications. These things go wherever this goes. Wherever the blue box goes, so goes the syndications. So I'm not having to mess with the structure. I'm just passing on the blue box. The kids take over the blue box, and then they get whatever it owns. So I like it from that standpoint, that it makes it very simple from an estate planning context to transfer this somewhat complex asset class to your beneficiaries. Now, if you're wondering, hey, Clint, you said it was disregarded LLC. Can it be a partnership when you started out? Yes, you can do this. Let's assume that you invest with another partner. The two of you can set up a Wyoming LLC right here. So let's say business partner here. This is me. If you know my partner Toby, this is Toby. Kind of obvious difference in height there. So anyways, the two of us are right here, and we put our money into this LLC, and we have $500,000. We own it 50-50. Now, because we own this 50-50, this entity here, or it doesn't matter if we own it 50-50 or 90-10, it's going to be a partnership for federal tax purposes. So if it's a partnership for federal tax purposes, and we're going to make that investment into a syndication, which we have done. So we have a different LLC that I invest with Toby on, where we do invest into syndications, and our LLC is structured as a partnership. When we make those investments, they look through the LLC, and again, they make sure we're both accredited investors. So if the type of syndication you're investing in requires that you be an accredited investor, then they're going to look through and they're going to verify that both the members of the LLC are accredited. So you can use a partnership as well. So I don't want you to think it's just disregarded LLC is the only option. But I do believe this, that if you are making investments into syndications, set up a Wyoming LLC or possibly a Delaware LLC to make that investment for the reasons that I described. Now, if you already hold an interest in your own name and you're thinking, wow, that makes a lot of sense, I wish I can get that out of my name, then what I would suggest you do before you set up your Wyoming LLC is reach out to those syndications, those sponsors, and have a conversation. Explain to them, hey, I'm setting up an LLC, and use this term, for estate planning purposes to hold my various interests. How can I go about moving my interest into the LLC? And you want to know this, because they may tell you how to do it, and a form you have to fill out. Make sure there is not a transfer fee as well to make that move. If it's minimal, maybe it's fine. But if it's substantial, well, then you got to weigh that cost versus benefit analysis in here. But this is how you should hold your syndication interest. I hope you pulled some great nuggets out of this video. If you got questions, be sure to go down below and pose your questions, and I'd be happy to answer those. as I always do. And if you like the video, be sure to hit the like button. If you want to reach out to Anderson, hey, we have a lot of links in the show notes. People typically miss these. I have a link to our one-day tax and asset protection workshop that we've been teaching for over 23 years, where we help investors just like you or small business owners get their business affairs structured properly and how to harness the tax code. Tremendous information. It's completely free. You can register. If you want to set up a strategy session with someone here at Anderson to work with one of our strategists on your particular structuring, hey, click on that strategy session link in the show notes. It's completely free again as well to sit down with someone here at Anderson, and we'll analyze your situation and help you put together a plan so you can move forwards, protecting your assets and reducing your taxes. Take care.